All right, I think we are live.
We are.
What is up, everybody? It is Wednesday, which means it's Boss Up and List Day. And what the heck is that?
That is our all-day virtual listing party that we host in the Boss Facebook group, where we check in about our daily goals and talk about, the strategy that we're going to use to get there. And sometimes it's about trying to get a bunch of things listed in one day. And sometimes it's about you got to go get some pictures done, whatever it may be. But it's our one day a week that we have people check in and kind of be accountable for their goals, at least for that day.
Yeah, for sure. So if you're not in the Boss Facebook group, you should totally join. We already have our post up for the day. People are checking in, saying what their goals are. So if you want some help with that, kind of keep yourself motivated, especially if you're at home by yourself and you want some extra help. But what is up, everybody? Thanks for joining us. We actually have an awesome guest with us today.
Yeah, this is exciting. I'm actually looking forward to this one.
Yeah, and I know.
Not that I don't look forward to all of our guests, let me just say, but I'm actually looking forward to this one. Our Wednesday show, we do want to mention quickly, is sponsored by Sizely. They are our one sponsor for the Katie and Vicki Boss Up and the List live show every Wednesday. And Sizely is it's size.ly.com. It's a fantastic.
Not .com, just size.ly.
Yeah, but they do have a website too. It is.
Yeah, that's the website. It's a weird.
Anyway. So
yeah.
They have, it's a great listing tool for people that sell clothing.
Yes.
It helps you, it has a lot of templates for measuring clothing, and it helps cut down on returns because you're going to have accurate measurements where buyers know exactly what you're measuring and where. And it's pretty simple and easy to use. It's also really inexpensive.
Check it out. And I think don't they have like a, some sort of sweepstakes going on right now?
They do. If you share their stuff on a bunch of different sites, basically log on to their site and it'll show you how you can earn points for like sharing and liking them on Facebook. And
you can win like a gift card.
Then you can win like $100 Visa gift card. And because it's a relatively small company, there's not a lot of competition for that gift card.
Yep. All right. But yeah, I see in the chat people are talking about my awesome t-shirt. It's not debatable. I'm awesome. This is actually a t-shirt designed by Teresa Cox, who's in the chat as well. So shout out to Teresa for this awesome t-shirt. I think, Teresa, don't you still have these? I think you have these up for sale on Amazon if anybody wants one, but I love this t-shirt. Anyway, so today we are talking about taxes. It's tax season right now. Everybody.
Well, soon to be.
Yep, pretty much. Most people, I think, are a little scared of taxes or causes a lot of anxiety. It's one of those things that, a lot of people don't really understand. And especially if you are a new reseller and you spent your whole life working regular jobs where you get paychecks and you get your W-2 and your employer takes the taxes out for you and it's relatively easy. You can go online or, go to
filing your 1040 EZ form.
Yeah, so it's like super easy. And now you've stepped into the world of reselling and it's tax season and you're freaking out, or maybe you're just starting and you're not sure what you need to do in the future. And so we have a super awesome guest with us today, Mark II. Not your dad's CPA. What is up, Mark?
Not much. Just starting to get busy over here.
Yeah, and we just figured out that Mark definitely knows what he's talking about because look at all those books he has behind us. A sure sign of someone's expertise and knowledge, right?
Right, but I'll let them know what I just told you. These aren't actually all my books. Right in my office.
So, Mark, why don't you go ahead and introduce yourself? Let us know kind of what your background is. And I know you're a reseller too. So what's that all about?
Yeah, I mean, online reselling is just the place to be. I mean, everybody should get in and get a piece. I tell people that, whichever business I can make it bigger with, I'll just quit the other one. So, I may not be a CPA for very much longer. We'll see.
So you're a CPA. How long have you been doing that?
So I've been a CPA for just over 10 years now. I spent a few years in public accounting, a few years in corporate finance, doing that whole thing. Started doing taxes on the side just to kind of experiment. I always said I would never do that because it's like really just cliche, You studied accounting, go make your own firm. Like I just thought that was so lame. But I started doing taxes on the side for people, and eventually I got connected with a couple who had a podcast, and after I helped them with their taxes, they emailed me, and this is a couple years ago, and they said, "Hey, we actually have this eBay podcast with about 10,000 listeners. Would you want to come on and talk to people about taxes?" And I was like, "Okay, I've never been on a podcast before, but let's do it." And you know, I just started getting all these emails from people who were selling on eBay and other platforms. And it was about that same time when I started selling online, primarily Amazon. And you know, it's just kind of snowballed from there. And now that's what I do. I help online sellers with their taxes and their businesses.
You
Nice.
have a niche market now. So it's a very much needed niche market. That's something that a lot of people are finding when they get into this business. It's really hard to find a CPA or an accountant to help you that has a in-depth knowledge of online business and online sales. So I found that I've been using the same accountant for my entire career of online sales. I was using him when I was a 1099 salesperson. And then I switched to online sales, and he and I learned it together. And because he knows me and my business so well, I won't use anybody else. I've been using him for almost 14 years, and he's in Rhode Island and I'm in Las Vegas, and I still send my stuff to him because it makes sense, because he knows me and he knows my business. If he ever goes out of business, I'm in trouble. So he's a partner in the firm, and he's not that old. So I'm hoping I've got a few years left.
Yeah, for sure. Hey, BB's Deals did a $1.99 super chat. Thanks for that. I don't know if you had a question or something, but we appreciate it. So Mark, what kind of, as far as your selling goes, what kind of stuff do you sell?
So I work with a friend, a partner, and we have one private label brand on Amazon with a few products underneath it. It's primarily like camping and hiking gear, utensils, and stuff like that.
Cool.
Nothing super special, but you know, it keeps my feet wet, and you know, I hope to eventually continue to grow it and expand.
Nice.
Very cool.
Make some money.
So I guess let's just jump right into it. Let's talk about new resellers. So people who are just getting into the game, which puts them in a really good position to kind of start out doing things right. What would you say are kind of the essential things they need to know getting started from a tax point of view?
Yeah, I think the one piece of advice, if I had to give just one, is just make sure you're separating your business activity and your personal activity from the very beginning. Like, keep it separate. Go get a business bank account. Make sure you run all your business stuff through that account, so there's no question about, you know, what's a personal expense, what's a business expense, and that just helps you set like such a solid foundation that's going to help you or save you so much potential headache further down the line.
It's a good advice. I've actually never done the business account route. I know I'm terrible, but because I only work by myself and I do most of my stuff using my PayPal as far as purchases and things for the business, I've been able to keep it separate that way. But what you're saying makes absolute sense, because when I reconcile my stuff, even just at the end of the month or at the end of the quarter or even at the end of the year sometimes, I have to go through and try and figure out which expenses are personal and which ones are business. And if you start from the very beginning keeping them separate, that's one whole headache you don't even have to deal with.
Yeah.
Yeah,
well, I know for me, it's like, you know, I've always used the PayPal thing, but now that I'm getting more into Etsy, I've got all my eBay payments are going through PayPal. So that makes it super easy. And I buy everything using my PayPal debit card. I don't do any of my expenses through my personal checking account, but now I've got like my Etsy payments are going into my personal checking account. So it's definitely something that like I need to be separating. So.
Yeah, I mean, I didn't separate stuff in the beginning. And it just creates a few extra steps that you have to do every month or every year or whatever. And you know, when I finally switched over, it just, you know, it frees up that time and that kind of mental space that you have to take to do all that stuff.
Oh yeah, anything you can do to simplify keeping your accounting, you know, the right way and going the right way is well worth it in the long run, for sure. I think we all make it a little bit harder on ourselves than we have to sometimes. In the same way that I look at people that sell online and they nickel and dime and monetize everything on each individual item. I think with the, you know, with the monster spreadsheets and Excel spreadsheets, and this is what I paid for this, and this is how each individual thing I just on a cost by cost basis just makes so much busy work for people. And I feel like it doesn't have to be that way. I don't do it that way. I know that a lot of people do, and it works for them. And great. If you like all those spreadsheets, good for you. I'm not a spreadsheet person, so I want to look for the easiest way to keep things concise and legal, and give my, you know, give the numbers I need to give to my accountant at the end of the year.
Yeah, for sure. So Mark, could you explain, I know I saw somebody in the chat kind of going on what Vicki just said. Somebody was asking in the chat about COGS, like cost of goods. Can you explain, I know there's two kind of ways that you can look at it. You can either write off the items like what you're buying, or write it off like after you sell them? Can you kind of explain like what that is and what you would suggest is the best way to do it and how that works?
Yeah, so I mean, historically, the proper accounting treatment has always been for retailers or resellers has been to deduct the cost of your inventory when you sell it. So like when you purchase inventory, it actually becomes an asset in your business, but not a deduction until you sell it. And you know, that creates a little bit of a headache, because then you have to figure out how you're going to track your inventory, how you're going to keep track of what you sell, when you sell it, and all that stuff. And there's software out there, and spreadsheets is another good option. But now with the new tax law, the tax changes, the Tax Cuts and Jobs Act of 2017, so that introduces some language that appears to give the option to all of us to just be able to deduct our inventory when we buy it. And you know, there's still like accounting firms reaching out for clarification on that, because it's not that simple. But either way, like whichever method you choose, I still recommend the first one, which is deducting your inventory when you sell it, because then you're matching up your revenues with your expenses, and you can get a lot better insight into what's going on in your business. Like you'll look at your profitability from period to period, and it'll make sense. You know, it's a lot different than if you go out and buy $20,000 worth of inventory and just deduct it all in 1 month, and then you're like, oh, I had this huge loss. You know, it doesn't give you a lot of insight.
Yeah, I'm one of the people that's always done it the opposite way. So it's hard when you've done things a certain way to like switch accounting methods. It's kind of almost impossible. You have to like start from square one. I've always been deducted my expenses when I did my purchases, and that's just the way that my accountant's always set it up and always done it. But again, I know plenty of people that do it the way that you're talking about too. So it's like, and then you have to deal with you know, depreciation of inventory and balancing that at the end of the year, what inventory you have remaining. It just seems so complicated. You make it sound easy the way that you're saying it.
It is a little bit more complicated, and it also depends on like how fast your items are turning over, like how fast you're selling through stuff. Because if I buy something and turn around and sell it in a week or two, then it's not going to make much of a difference in my financial statements or my financial records, which method I'm using.
Yeah, for sure.
Makes sense.
So I had there were some new sellers that had asked us some questions to ask you, and one of them was, you know, they're just starting out. At what point should they be thinking about getting like a tax ID number as opposed to just doing it through their own personal taxes?
Yeah, that's a good question. So as a sole proprietorship, which that's what you are by default once you start selling, like the IRS doesn't require any type of registration for you to be a sole proprietorship. You can get an EIN as a sole proprietor. It's optional. If like sometimes a case where you would do that is if you wanted to open up a business bank account, the bank might require you to have an EIN. So you could go do that as a sole proprietor. If you want to go form an LLC, which is usually the next step after being a sole proprietor, that would require you to have an EIN. So that's just part of setting up the LLC.
And so what are the benefits for starting up an LLC as opposed to just staying a sole proprietor?
So that's a good question, because a lot of people think that if they go form an LLC, they're going to have like all these tax benefits and save all this money. But there's really no difference in taxation between an LLC and a sole proprietorship. So the main benefit is just having additional liability protection. It's separating your business from your personal assets even more.
Okay, so if you have like, for instance, if you have like significant personal assets, let's say you own your own home and things like that, it might make more sense to do something like that to separate it out. So if anything does go wrong with your business, it doesn't affect you personally. Would you say that's true?
Yeah, exactly. And it also depends on what industry you're in or what type of stuff you sell. That might determine whether you would want to go do that sooner than later.
Depending on if you have some type of liability based on what you sell, is that
yeah, exactly. And I mean, if you plan to continue to grow and you know you're in it for the long haul, like I would just recommend doing an LLC from the beginning. I mean, it's not super urgent, but it's almost always a good idea.
Okay. All right. Okay, so let's talk about people who have been selling, and maybe let's say hypothetically, I might be behind in my taxes a little bit, Mark. Hypothetically. All right. What would you suggest? Like, how do people deal with that if they're behind a couple of years and they're feeling worried and they're real nervous and they want to make sure they do it right? What do you like? How do you tackle that?
So generally, if that's the case, the person is not going to have a lot of records in a lot of cases. So one thing that you can do, depending on how far out you are, is you can actually go to the IRS website and you can request a transcript, and they'll show you what they have on record for you for, a certain number of years. So then you know what they're expecting. If you don't have any records, you can at least go back and file your taxes for those years, and you can report what's already been reported to them. And then once they get your return, they'll be like, okay, they're good. And you won't have to worry about them coming after you. So that's a good starting point for people who haven't filed for, several years.
Okay. You're not several years.
No, I'm not several years, but I do think that would be a good idea. Let's see. Somebody wanted to know, what's the cost of becoming an LLC? Do you have any idea, like, what kind of cost is involved in that?
Yeah, it depends on if you pay somebody to help you set it up or if you do it yourself. So if you do it yourself, you're going to still have to pay a state filing fee. Like in Texas, it's $300, but every year after that, they don't have, at least right now, they don't have any recurring annual fee.
Mm-hmm.
Whereas another state, I think Utah, I want to say it's like $50 up front. And then, I don't know, some states have a small initial fee with recurring fees afterward. California is $800. Bless its heart, every year.
Jeez. Yeah, California is tough when it comes to that kind of stuff. Lori says that I'm freaking her out and I need to boss up and get my taxes ready. Here's the thing, Vicki and I are getting married later this year. And so this is like the big thing that I need to take care of before that happens.
Yeah, I'm not marrying her until her shit is in line. Because here's the deal.
Smart.
Her issues are not my issues, and she's not bringing them into the marriage and making them my issues. So
yeah. You're stuck with me.
I do my taxes every year. I definitely file an extension every year. I'm not going to lie, but
I always have
every year.
I always have. But yeah, so the last couple of years, like I need to catch up.
She's 2 years behind.
I need to catch up. So
not forever. 2 years is not horrible.
Yeah, so I'm taking care of it. So that's happening in the next couple of months. But yeah, let's see, what are some of the other questions people had? I know somebody, so Desiree said that she's finding it that since she started using promoted listings, it's harder to keep track of fees to go against COGS. Do you have any suggestions about that, Mark, as far as like promoted listings go? I mean, how would you kind of deal with that? Do you put that in with your COGS, or is there a way to kind of easily deal with it?
Yeah, I would just put that under advertising. I wouldn't worry about adding that into the cost of your inventory itself.
I use it as a line deduction of advertising too.
Yeah.
Mm-hmm.
Okay. Let's see. I'm just trying to keep up with the chat here. I know there's somebody else that had a good question. You got any questions?
No, he's covering a lot of good stuff.
Okay, so another thing I wanted to know about, when people talk about this in different Facebook groups and stuff like that, we're always like, hey, you should go find yourself a CPA, find yourself an accountant. There are a lot of accountants out there. There are a lot of CPAs out there. How can a seller who's looking to hire a CPA, how can they kind of figure out how to find somebody who's qualified, who's going to do the job right? I mean, obviously, it'd be great if they come and find you. I mean, are you for hire right now, Mark? Like, how does that work?
I am. I keep telling everybody yes for the most part, and eventually it's going to hit me, and I'm probably going to have my heart stop here in the next month or two. But so far, so good.
Okay, all right. And so if they're just looking in their area, they want somebody local that they can go in and like take all their papers to and lay them out on the table. What should they be looking for?
What kind of questions do they ask, first of all, like of a CPA?
Yeah.
Yeah. So, I mean, that's a good question. I've never had to go out and find a CPA. So I've only talked to people. Like when you go locally, the pool is a lot smaller. So it's potentially less likely that you're going to find what you're looking for. Like I actually just talked to somebody this morning who is looking for somebody who's more, computer savvy, like willing to take advantage of technology and stuff like that, because she actually went in to talk to a CPA and he wanted her to send him everything in like hard copy paper format, and that's not what a lot of us like reseller types are really looking for. So you want to make sure it's somebody who, can accommodate what you're trying to do. But I mean, as far as questions to ask, I mean, you want to know if how they charge, are they hourly? Are they like a fixed fee? Are they familiar with e-commerce? I think is the most important one.
I agree.
If they're not, can they figure it out? Are they familiar with inventory-based businesses? There's, do you have a rapport with them or whatever? Like, is there a chemistry between you? What's the turnaround? Like there's so many questions to ask, but I mean, those are some of the important ones that come to mind.
Okay. And then, so we got some questions about, do you care about where sellers live as far as what state they're in, if you're going to take them on as a client?
No. So I do 99% of my work remotely. My clients are all over.
Okay, very cool. And by the way, guys, I have a link to Not Your Dad's CPA, Mark's website down below in the description. So you can always go check him out and check out the website. So Allison wants to know, how easy would it be to do my own taxes? Do you have a recommended program? So for somebody who wants to take on filing their own taxes as a reseller, is that going to be something that's super difficult for them? Are there programs that you would recommend, Mark?
I'll admit, the 1 year I tried to do it, I got audited.
Yeah.
So here's my hand up. The 1 year I tried to do it, because my accountant had done it for all these years, I kind of figured I knew how to do it. I had my taxes, I had my, my line item deductions. I kind of followed along with how he did stuff, and I still got audited. So, and I screwed it up. So I think I owed like an extra $1,500 or something. I'm just going to say, for my peace of mind, I'd rather have a CPA's name on my taxes when I file them. Because here's the one thing that Mark can attest to too. And not just necessarily a tax preparer, there's a difference between a tax preparer and a CPA. But if you have someone that signs your taxes for you as a CPA, they're able to help you if, God forbid, you are audited. And that means that they're putting their name on that paper, that what they're saying is they've seen proof that that is what the numbers are. So that's a big thing. You got to understand that when you pay for a CPA, you're paying for that protection and that peace of mind. Am I wrong here? Did I say anything wrong?
No, I mean, so the one thing one thing, like the IRS still says whoever return it is, they're ultimately responsible, even if you do have it prepared by a CPA. But yeah, you're right. I mean, if the CPA prepared it, then they'll be there with you to figure out any potential, hiccups that come along down the road. But I mean, as far as a tax software, I mean, I hear about the big ones, TurboTax, H&R Block software. I mean, you can't, I don't think you can go wrong with either. It's really all about your comfort level, because they're interview-based software where they ask you questions and you just enter the answers. And some people like me, I would be sitting there entering these answers, but then wondering like, okay, what's actually going on in the background, while I'm putting in this like surface information. And a lot of people, that's more, stress than they can take. They're like, I think I'm doing it right, but I'm not sure, so really you're paying for peace of mind.
Okay. So Teresa has a really good question. How does a CPA determine the rate for a return? Is it based on like the size of the company, employees? Like why would one charge only a few $100s and another one charges a few thousand?
Yeah, that's a good question. I mean, I think they price differently. Some might do it based on the standard amount of hours it takes. Other people just have a fixed fee. If you have a certain amount of schedules, they'll have a price for each schedule and just add it up that way, or hourly, or, it's also somewhat location dependent. If you go to the same CPA in Texas and Los Angeles, the one in Los Angeles is going to charge you twice as much.
Yep, that's a good point.
My guy's been charging me the same rate for 12 years. Again, another reason why I'm never going to leave him.
Wow.
Like, I'm very lucky. I know this. And no, you can't have his name. No, I'm just kidding. But he's actually, 12 years, 13 years or so. I pay $200. And I know that that's a ridiculously low amount for a self-employed individual. So believe me, I understand that. So another reason why I hang on to him.
Yeah. So Jen Lee has a great question. So you're a reseller, you're doing your thing, and you finally kind of reach capacity of what you can handle on your own. You're ready to hire somebody as an assistant, and you just want them to do photos or whatever, just a little bit every week. What is the responsibility for us as resellers? Like, as far as, is it an employee, is it an independent contractor? Like, what do we need to be doing when we're hiring somebody to work for us?
Yeah, I mean, there's a trade-off, but the simpler way to go is just to hire somebody, I think, as an independent contractor rather than an employee. So if you hire somebody as an employee, there's more administrative things that you have to do. You have to put them on payroll, you have to withhold their taxes and submit their Social Security and Medicare and all that stuff. If you hire them as an independent contractor, they are essentially self-employed, and you pay them whatever you pay them. And really the main thing you have to do is send them a 1099 at the end of the year if you pay them over $600 during the year. But that's a really easy way to go.
And so for an independent contractor, like what are the guidelines that kind of determine that that's what they are?
Yeah, that's a good point, because you could hire somebody as an independent contractor, but if you treat them too much like an employee, the IRS could come in and say, no, this person is actually an employee based on the hours that you're requiring that they work, or based on the activities that you're having them perform, and then just force you to do everything that comes along with that. I don't know the guidelines off the top of my head, but that's essentially what it is, like based on what they're doing for you and how much they're doing it.
Okay. Let's see. And so looking at these questions.
Minia, we did actually discuss the LLC information earlier, and so if you want to come back and watch the video after the fact, that'll give you your answers to the LLC questions.
So Lisa wants to know, what expenses can you deduct?
A lot.
I mean, there's a lot of them, right? So
everything.
I know
Not everything, but
there's certain rules where you can only, like, let's say you're going on a business trip, like you're going to go sourcing to another town, another state, you're going to stay for a few days. Aren't there, or even like you're going to eBay Open and you want to write that off as an expense? Aren't there rules around, like, you can't necessarily deduct 100% of everything that you're doing, right?
Right. I mean, for the most part, if the expense, if you incur it in the course of your normal business, then it should be deductible. But you're right, there are some things like meals that qualify. They're only 50% deductible. Sometimes you have to choose between either deducting business mileage for your auto expenses or deducting your actual auto expenses, like your gas and maintenance and stuff like that. So there are some nuances, but in general, any business expense is going to be deductible or partially deductible.
Okay, so somebody decides to go to eBay Open, they can deduct 100% of their hotel, but
registration fee,
but only like 50% of their meals, basically, is what you're saying.
Right. I mean, you'll still, like, if you're keeping records in a bookkeeping system, you'll still enter 100% of the meal, but then when you put it on your taxes, whatever tax program you're using will cut it in half and only deduct 50%.
Gotcha. That makes sense. Let's see. So somebody's asking about being on disability and being an online reseller. Do you know
There's a lot of that. There's a lot of resellers that are on disability that use this to make a little bit of extra money. And I know that there are limits to that.
Yeah, there are. I mean, I don't know from a tax perspective, Mark, if you know anything about that, but do you know anything about the federal disabilities not getting cut while trying to work and make up some income, because there's like limits to how much you can make if you're on disability?
Yeah, I don't know the limits off the top of my head. I've looked into that a little bit, but I mean, I know there is a relationship there. If you have a certain level of income, it could affect the amount of disability that you receive. Both at a federal and state level, I think, but I don't know the limits off the top of my head.
Okay. Teresa wants to know if you're planning on going to eBay Open this year. You were there last year, so are you going this year?
I don't, possibly. Where is it this year?
It's going to be in Vegas again, pretty much around the same time. They don't have the exact venue figured out yet, or they haven't announced it yet. So it should be, it'll be in July.
You know, maybe I will. I'm pretty close. And, you know, last year I didn't even actually have a ticket. I just went and sort of crashed it and, you know,
Hung
mingled
around.
with people. Yeah.
Well, you should definitely go.
You can write off the cost of your ticket, Mark.
Totally. Totally.
So, so Lori has a question about determining the assets of your stock. Are you looking at the purchase price, so the cost of the goods, or the listing price? If you're doing it as like as an asset, your inventory.
At your cost. So whatever you go out and buy the inventory is, that's what you record it at. That's what the value of your inventory is on your books.
Okay.
Okay.
What percentage of your cell phone bill can you deduct?
Whatever percent that you're using it for the business. So if you're on your phone for your business 8 out of 10 total hours that you're on it, then deduct 80%. It's pretty simple.
Yeah.
All right.
What is I know that this changes every year, every couple of years. What is the mileage deduction rate now?
I always forget. I want to say for 2018, it's 54.5 cents.
And so if you go by mileage, you're saying that then you wouldn't be able to deduct like your gas and stuff like that.
Correct. Yeah, you can do whichever is more beneficial.
Okay. All right. I have a question about, you know, since probably the vast majority of people watching the show right now are working out of their home. I was wondering if you could like kind of clarify what the deal is when you have like a dedicated space. So for instance, I have an office, Vicki has an office here. Those are dedicated spaces that we just use for work. But then like the room where we do our photography is also a living space. But I would say we probably use it the majority of the time for work, but it is a shared space. So how does that work when you're figuring out deductions?
Technically, I deduct 50% of the living area, that particular space.
Yeah, you do 50%.
I do.
Right. So I'm just asking.
Take the percentage of you take the square footage of your house, and you take the square footage that is the percentage that is dedicated, and that is the percentage you write off of your rent or your mortgage.
Well, let's ask
let's ask
the expert, Mark. What would your answer to that be?
Yeah, so there are a couple of things here. And the home office deduction, it's not one that people should be afraid to take, like a lot of people are. It's not like the trigger or the red flag that people think it used to be. But the IRS does want it to be for regular and exclusive use. So those are the two like keys. If you have an office space and you're using it regularly and exclusively for your business, then that qualifies it for the home office deduction. And then, you know, once you do have that regular office space, you can use two different methods. You can either do a deduction based just on square feet. It's the simplified method. You can get $5 per square foot up to 300 square feet. Or you can use the method where it takes the proportion of your office square footage to your whole home, and then, you know, takes that proportion of your utilities and your mortgage interest and your property taxes and all that stuff.
I do.
So you can only go up to 300 square feet. So how does that work if you have, like, for instance?
Well, that's for the first option.
Right. Yeah.
For the first option. So for the second option, you're just doing a percentage. You can do a percentage of the whole house. Because,
right.
Yeah, because like we have, you know, 2.5 car garage that is exclusively only for inventory. It's the only thing we use it for. And then, but then we do have the rooms where like photography and stuff like that is a different room. So, okay. I think that clarifies a little bit.
Minnie asked a question there. I bought my mannequin light kit laptop. Do I deduct the full amount I paid for those items or just a percentage of them? So that's where you're asking whether you're going to deduct the full amount one time, or you're going to do a depreciation and deduct a little bit each year. Mark, what's the best way for that?
So with like assets like that or machinery that you continue to use and have a life over several years, the historical thing that you would do is, you know, you capitalize it, you count it as an asset, and then you depreciate it over the years. But the IRS has given a threshold. They call it a de minimis safe harbor threshold of $2,500. So if you buy a laptop that's, you know, $2,400, what they're saying is, you know, you can just deduct the whole thing. You don't have to worry about depreciating it over time. So I would just deduct all that stuff. It's way easier and it gives you a bigger benefit in the year.
Yeah, for sure.
That's what I did. I've been doing this so long that I remember when I had to do depreciation on a new computer. And now, like, I bought a computer last year and I was able to deduct the whole thing. I was like, oh, okay.
Yeah.
Okay, so Teresa, just we want to clarify this in case this wasn't answered right. She wants to know, can she deduct the garage space because the garage is 100% dedicated for inventory like ours is? But can she count that as home square footage? Basically?
Yeah, I would include the garage in the square footage.
Okay, perfect.
Good questions.
Yeah, Teresa agrees. Deduct over depreciation all the way. So very cool. So Lady Loves BMC wanted to know, what is the difference between an accountant and a CPA? Because I think we've been kind of like throwing that around as interchangeable. Is there a difference?
Yeah, I mean, accountant is just more of a general term. An accountant, a CPA, well, a CPA is an accountant, but an accountant is not necessarily a CPA. Like I could study accounting in college, or maybe I don't even study accounting and then I just go work and do an accounting function at a job. I'm an accountant. But to be a CPA, which is a certified public accountant, you actually have to have certain experience. You have to take a test, and then you actually get a license to practice public accounting. So it's a little bit more specialized.
And you're registered with a license number and all that kind of thing, as opposed to an accountant doesn't necessarily have to have a license.
Exactly.
To do it. Okay.
All right. So now we were talking about, people wanted to hire you. So far, you're still saying yes until apparently you can't handle it anymore.
Get in quick. Get in early.
But aside from hiring you, I know that you just recently launched a new product. It's like a course, right? Do you want to go ahead and explain to us what it is that you have made available?
Yeah, so I mean, it's a tax course, and when I first had the idea just a few months ago, I was like, a tax course, okay, that sounds like the worst product idea ever. Like who's going to want to buy that? But I mean, part of it's because I want to be able to reach a wider audience. There's only so much that I can do personally. And, I just find myself answering the same questions over and over again. And I started to notice a connection between taxes and, the overall success of somebody's business and their overall peace of mind. Because it's like, for a lot of people and a lot of new sellers, it's such a rain cloud over them constantly and source of stress and anxiety that comes from uncertainty.
It's scary.
So,
taxes are scary.
Yeah. So, I mean, but yeah, I created this tax program. It's just, it's a course, it's 5 modules, it's video and audio, and it talks about everything from basic tax law to deductions to questions you should be asking yourself as an online seller with regard to your taxes and your business. How to clean up a tax mess, how to stay away from the IRS, and how to, how to have a solid accounting foundation, that you can build on so you can even have a chance to optimize your taxes. But yeah, I've got a lot of good feedback so far. It's ecomtaxguide.com, guide, not guy. And,
we have it listed down below.
I have the link to it down below. So if somebody was going to go ahead, like particularly like Allison, who was asking about doing her taxes herself, if somebody like that wanted to go ahead and purchase that course, they get those 5 modules. Does that give them access to you at all? If they have questions, like what else comes along with that?
Yeah, so you have access to do all the modules at your own pace, and you also get access to a private Facebook group that's specific to that program, where we also do like a live Q&A according to a schedule that's specific to each module. So kind of at the completion of each module, I would do a live Q&A. And yeah, I'm answering questions in there and stuff. So there is that live interactive component.
Okay, awesome. And then Teresa had a question.
I think Katie needs to get that that class that does those modules.
Sounds like it. So Teresa wants to know, what is if somebody wants to actually hire you, Mark, or hire Not Your Dad's CPA, what is the process for that? Do they just need to go to your website? Like, what do they need to do to get in touch with you?
Yeah, it's really just sending me an email, and
couldn't make it any easier.
Yeah, I mean, for taxes, for a lot of my clients, I've never even spoken to them on the phone, and that's how they prefer it. They're just like, here's my stuff, let's get it done. If it requires more than that, obviously we would have a phone call, talk about your business, talk about your needs. And, you know, I can recommend what I think would be most beneficial to you. It's just, you know, it's just case by case.
I think this is perfect because that's how I deal with my accountant too. And it's so much easier. He's actually, you know, he's 3 hours ahead of me on the East Coast. And, you know, sometimes he'll have questions. We do a few emails back and forth and he'll be like, okay, can you clarify this, this, and this? I send it back to him and then my taxes are miraculously done. And I'm always like, you're a miracle worker every time. But it's so great. I mean, I think a lot of people have so much anxiety surrounding taxes. They have a lot of anxiety surrounding even the whole process. It becomes this insurmountable thing. And finding somebody that you can communicate with that understands the business and the process like you. And hopefully there are more people like you out there that people can find in case you get inundated. Because we do have 6,000 subscribers on the show. Not that that's a million, but 6,000. And even if there's only a couple hundred watching right now.
It's like right around the corner from a million. I mean, come on.
We're real close. But yes, I think that it's really important to get that rapport going. And the fact that you said you can do most of it through email and maybe a couple of phone calls if necessary, that's perfect because so many people choose this business because they like the anonymity of working behind a computer and a lot of social anxiety, all those types of things that play into the reason why people choose this type of career or this type of job, that just definitely overlaps with other areas in their lives. So if this is something they can do without leaving their own home, without having to go into it and spread out a shoebox full of receipts for you, it's perfect, I think.
Yeah, for sure. So Will in the chat, Will Armstrong was asking, you know, does this apply to your part-time eBayer? Does this become an issue if you make a certain amount of money / sales? No, I do see this question a lot, and I'm sure you do too, Mark. In a lot of different Facebook groups, people will ask because there's the whole PayPal thing where they, you know, they submit a 1099 to the IRS like once you have exceeded $20,000. So there are a lot of resellers out there who think like, oh, I only sold X amount this year, so I don't have to bother to report that. Can you tell us like what is the real deal and what do sellers need to know even if they're just part-time?
Yeah, I mean, so technically any profit you make is going to be taxable, whether or not it's above the you know, $20,000 threshold. So yeah, there are a few different thresholds and that can be confusing, but in general, any of that profit you make is taxable, you know, even if it's $1 profit.
Yeah. Now, the one thing that is different is if people are selling things that belong to them, right? Like and a lot of times people, when they very first start reselling, they're just selling stuff from around their house that they bought for their own use. Can you explain what that whole deal is?
Yeah, and that depends. Like if you're selling, if you bought a pair of jeans for $50 5 years ago, but you know, you go and you sell them for $10, you're gonna have a loss. So there's no tax due there. But if you had a profit, that would still actually be taxable.
Right. Perfect. Okay. So basically, if you bought all these awesome t-shirts and jackets back in the 90s, and now you're selling them for hundreds of dollars because they're super cool, that's considered a profit?
One would probably, well, yeah, the IRS would probably say yes.
All right. Yeah, so Big Mac, I think we talked about, probably covered that. What if the majority of items you sell are from your own household?
If you sell them for less than what you originally paid for them, then it's not a profit.
Then don't worry about it.
Don't worry about it. But if you're buying anything or you're taking anything from outside your home that you purchase, say you get it for 25 cents at a garage sale and you sell it for $10, you now have to start accounting for a profit.
Yeah. So bottom line is if you made a profit on it, that you have to pay taxes on it. You have to report that. You know, the question of, well, the PayPal didn't send my thing in, so the IRS doesn't know. It's like, well, yeah, technically that's true, but does that mean that you get to not pay taxes on it? No, the law is that you still have to. So.
And Mark's going to give you questions that are answers that apply to the law, not to how to circumvent the law.
Well, exactly, because that's the thing. It's like we're always going to say, this is how it works. This is what the rules are. We can't make people do anything any certain way, but. So Teresa, it says, what do you use as your COGS, your cost of goods for something you bought 10 years ago? If you bought it for 100 then and sell it for 200 now, it's $100 profit. That's basically it, right?
Yeah. So the general is, I mean, if you're bringing a personal item into your business inventory, you'll use the cost that's the lower of your cost or the market price. which can be hard to determine, but that's the general rule.
Okay.
That's clear as mud, that one right there.
Yeah, yeah.
All right. So here is a great question from Sandra. She says, my wife works a 9 to 5. I do eBay, and I'm an independent contractor for pet sitting and Amazon. Should we still file jointly?
Yeah, the answer to that is almost always yes. There are cases where it can be more beneficial to file as married filing separately, but they're rare. So I would probably say she should file married filing jointly.
Okay.
I think some of the deductions that you're going to have in your business are going to offset some of her not having deductions with a traditional 9 to 5. So you may end up with a better tax benefit and end up with more of a refund if the refund applies on her because of what she's paid in. That'd be my guess on that, because I've been in that same situation before.
Yeah. So Trisha wants to know, how do you account for the value of your time? Does that even come into play when it comes to taxes?
No.
No. I think maybe if you were paying yourself a salary and you were scheduled in a way that you're paying yourself an hourly rate, but that's an entirely different conversation.
Yeah. So Fader Faded wants to know, as a married couple, if you only made a combined total of around $23,000 in 2018, would you end up owing anything? I don't know. Is that a question you can answer, Mark?
Yeah. So there are two main pieces to a tax return if you're self-employed. So you have self-employment tax, and then you have income tax. So self-employment tax is around 15% of your profit. So they would owe self-employment tax on those self-employment earnings.
Yeah.
But then they might not owe any income tax, just because the standard deduction would kind of wipe it out. If that makes sense.
Okay. Will wants to know, is there a tax form for eBay sellers, like a 1099? I mean, I think we can answer that. Any tax form you're going to get at this point is going to be from PayPal. And that's only if you exceed $20,000 in sales. Now that just means that they're providing you with a tax form, with a 1099 tax form.
Because they're sending it in to the IRS.
Yeah, because they're sending in.
They're reporting it. So if you're getting one from eBay, you better be.
Well, from PayPal.
From PayPal.
From PayPal. eBay does not do that as of now, but they just started doing their payment processing through the new payments program. So how that's going to look moving forward, I don't know. Mark, I don't know. Do you know anything about that?
I don't know yet.
Yeah. I mean, I have a little bit of income from Etsy, a little bit from Amazon, a little bit from Bonanza. None of those give me a 1099. Even Amazon doesn't give me a 1099 because it's so low. So I have to keep track of that stuff myself, because they're not going to do it for me. And I think if you're not getting something spoon-fed to you in the form of a piece of paper, you need to, be responsible for it yourself.
Yeah. Thrifting Nomads in the house. What's up with that? What's up, guys?
They're so cute. They're the cutest couple. Honestly, you need to follow them.
Yeah, apparently, they moved from the Vegas area to California, and all this talk about taxes and costs of doing business there. You guys need to come back to Vegas. But they just gave a $4.99 super chat, and they wanted
specifically
for a super chat song. So I'm going to do it. You're like leaning away. You can't lean too far because we got the headphones.
I'm preemptively.
We got a little super chat song. Super chat. She's super chatty. Yow. See, Mark, you probably don't watch our show, so you may not know about my amazing super chat song, but I'm sure you're really impressed right now.
I'm super impressed. Loving it.
All right, so let's see. Okay, so HC had a good question. If you do home office deduction, deducting the actual cost, when you sell your house and have some gains, how do you deal with this earning on selling the house? I mean, I don't know anything about that.
Yes, so that's one benefit of using the simplified home office deduction over the traditional method, where you're actually using your utilities and stuff. Because part of that deduction that you can take is the depreciation on your house. And if you ever sell your house, there's what's called a recapture of that depreciation, where it's basically all added back and taxed a little bit. So, so yeah, it's a little bit more complicated. It's really just a timing issue of when you want to take that benefit of the depreciation. And that's sort of like an analysis that has to be done case by case. But if you don't want to deal with it, just use the simplified method.
Good question. Good question.
Very good question. Angie wants to know if I have to pay taxes on super chats. Yes, I do.
Actually, yes, there is going to be, yes. First of all,
any YouTube income.
YouTube takes 30% right off the top. And then you do get a.
So that's the YouTube tax.
Then you do get a tax. you do get a 1099 from YouTube for income.
Yeah.
Let's see. There's a question here. Items, packaging, gas and vehicle used to post office, thrifting, etc. Tax deductible. Yeah, all of those things are tax deductible. Your cost of packaging goods, your gas or your mileage. You can't do both. You've got to do one or the other. For your mileage to go to the post office, thrifting, etc. Yes, all that kind of stuff is tax deductible. You got to keep a mileage log, or you should keep a mileage log, for sure.
So Basement Crafter wants to know if state taxes were covered. Are you talking, you're talking about state versus federal, or are you talking about sales tax? I mean, there's some states where, like here, we don't do a state tax. So if
Nevada is great. If you happen to be self-employed, Nevada is a great place to live because you do not pay state income tax. So there are a couple of states that are like that are really good and actually have a good tax benefit for being here. And if you're a 1099 person or a W-2 person, you actually end up with a nice increase or bump in pay if you happen to move to Nevada usually because of that.
So Jennifer wants to know if you are selling stuff from your house and it's from like 20 years ago, how do you prove what you paid for it? Like when we're talking about profit and stuff like that, since clearly most people are not going to have the tax from something that they bought 20 years ago, or not the tax, the receipt from something that they bought 20 years ago.
Yeah, I mean, in that case, you just kind of have to use a reasonable estimate and be able to show how you came up with that estimate. But I mean, I've never seen an issue there, really. You know, if the IRS isn't going to, if they know that you have that you bought an item 20 years ago, it's very unlikely that they're going to come in and really press you on like, okay, prove that that's, you know, really worth, or that you paid $10 for that or whatever. Like, it's just not worth their time.
Right. So it's going to be something like if you were like, oh, I made, you know, the 1099 goes in from PayPal and it shows that you did $200,000 in sales, and you try to file your taxes and say, oh, this is all stuff I bought for $300,000 20 years ago. Then they might be like, oh, okay, maybe we're going to want to look into that a little bit. But if we're talking like, you know, here or there, you sell a pair of jeans.
Yeah, Teresa, 20 years ago, I always paid $300 for my Gap jeans. Yes.
So as long as you're using common sense and actually attempting to be honest, and when you're kind of figuring this stuff out, you're not going to have a problem.
I mean, there's a lot of things that you're not going to have receipts for that you're still going to want to take into account. You know, for example, I've talked about this before. I do a lot of garage sales. I go to a lot of yard sales, and the way that I account for that is that I print out I print out a list of all the garage sales that I go to, usually from like MapQuest or whatever. And I know this is old school, but it's so that I have something for my records. I print it out and I keep it with me in the car when I go on the garage sales. And then I will write next to that address what I spent. And that's my record keeping. And that is acceptable by the IRS if I were ever audited, because it's kept in and it's dated. It's like keeping a mileage log, and keeping a mileage log, a lot of times that's handwritten, or you're using an accounting, some type of software for it. You just have to be diligent. And I spend so much at garage sales that I have to keep track that way. And they've never come back to me and said, where's your receipt from the garage sale from the Smith's house on, in May 23rd. You just have to, if you keep good records and you're honestly doing the best that you can, then that's pretty much what the IRS is looking for.
Yeah, I would agree with that.
So Allison wants you to know that she's very impressed with your level of knowledge, Vicki, and she thinks maybe in a past life you were a CPA.
No, but I was a mortgage broker for 15 years, and I did my own underwriting. So I actually looked at thousands and thousands and thousands of tax returns and with people that were in all facets of business and all different types of schedules and K-1s and things like that. And so I know how to read a tax return, and I know what can be added in, what can be deducted, and what can be added back to determine somebody's actual income. So that has helped me a lot in learning how to do my own stuff, and that I've been doing it myself for a long time. So even though my accountant does it for me because the process scares the crap out of me, I am old school, and I will tell this because I laugh. Like, you're talking about people sending you paper. I send him a lot of paper because I do a lot of stuff by hand. I hate spreadsheets. I hate Excel. I hate accounting software. For me personally, that's what gives me anxiety. I would rather sit down with a notepad and reconcile my everything line by line on a piece of paper. And that's how I determine my stuff. But I have a really good handle on my income and my expenses that way. And that doesn't work for everybody. You got to find the method that works for you. You know, and I just do all that stuff every year, and I do it month by month by month. And then I can end up giving him a printout so that he sees it. And, you know, it's probably a little bit more work for him that way, but he's happy that I'm not sending him a box of receipts in a shoebox. So it works. It works for both of us.
Let's not talk about my box of receipts, okay?
Oh, it's ridiculous. So she has some paperwork, Mark.
I do save all my receipts, okay? I do save all my receipts. I have done that. So Teresa wants to know, is there still, speaking of receipts, is there still a $75 threshold where you don't need a receipt?
That's a really good question. I don't know the answer to that. I'm going to have to look that up.
All right, Teresa, you stumped him. You stumped him. All right, so we're coming up just here on an hour show. Yeah, see, all these other people have the shoe boxes. Anyway, so we're going to wrap this up because I think, you know, we've put out a lot of information here that people got to stew on. Maybe they got to come back and rewatch the show. But Mark, you have your course that's available. That's down below. Also, his website's down below. So I know I saw a couple people saying that they wanted to hire you. So I apologize that you may be getting a little bit busier here in the coming months.
I'm pretty sure Katie's going to be hiring you. So
got to raise my prices.
Yeah,
apparently so. Apparently so.
Supply and demand.
But Mark, we really appreciate you coming and being on the show with us. I know this is a topic that a lot of people have questions about, so it helped a lot.
Do you have anything that you want to add for our viewers?
Yeah, I mean, I would say, you know, don't stress. It doesn't have to be as painful as you think it is. Like everything can be solved. You know, 99% of the situations that people come to me with are not as dire as they feel like they are. So
right. You're not going to go to jail because you filed your taxes incorrectly from eBay last year. It's not, the IRS is not coming after people like us. The IRS is coming after huge tax evaders that are really trying to deliberately break the law. People that make some mistakes on their taxes, or you're a couple years behind because you've got anxiety over it, or you didn't get around to filing. You just do your best to get in line, call an accountant and get started. The first step is making that phone call or sending that email.
Absolutely. Absolutely. All right, Mark. So thanks again so much. And hopefully you'll be hearing from some of our viewers. And thanks to all of you guys out there for watching the show. We'll be back.
We did have about 130 people watching live at one point. So that's not a bad drop off from our usual weeks, considering
they're scared.
Considering taxes scare people. So
yeah, for sure. But anyway, we'll be back on Friday for our Friday show. So thanks, guys. Get back to listing, and we will see you later. Bye.
All right, we're off.
All right, Mark. Thanks again so much.